Okay, so 2020 smacked us upside the head. We did not see it coming and it changed the rules for how to choose a mortgage in 2021. And that's what we're gonna do today, is we're gonna give you 7 new rules for choosing a mortgage in 2021 and moving forward. And at the end of the video, I will tell you exactly what type of mortgage I would take, knowing what we know now and going forward into the new year. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to 10,000 subscribers, where we're gonna pay one lucky subscriber's rent or mortgage payment. All you have to do to enter is subscribe. Okay, so the background's different, my hair is significantly longer, rates are an all-time low. In fact, they're 1.5% lower than they were when we did the same video last year. And that probably means that there's never been a better time to pick a 5-year fix, because rates are probably gonna go up, right? Well, not necessarily, and that's why we put together this video on the 7 rules for picking a mortgage in 2021. Because here's the deal, 2020 completely changed the rules in how we select a mortgage. That's just the reality of it. The way that we suggested that you choose a mortgage last year, well, 2020 just threw that all out the window. So let's get into it, and let's start with rule number 1. So rule number 1 is to always choose the mortgage with the most flexibility, because if 2020 taught us anything, it's that we don't know what the future holds, and we need to have the flexibility to make changes to our mortgages. The people who chose last year to take a 5-year fixed at 2.74%, well, they basically have missed out on 1.5% reduction in interest rates, and they're paying significantly higher than they have to because they chose at that point to take the security of a fixed rate mortgage because they assumed that there was nowhere for rates to go but up. And that just wasn't the case, and we know that now. And what history has taught us is that there will always be surprises, and surprises, especially in an economy, typically lead to lower interest rates, and lower interest rates means savings. So going forward, from 2021 going forward, we suggest always taking the most flexible mortgage you can, and what that means is typically a variable rate or a short-term 1 or 2 year mortgage. You don't want to take a 5-year fixed, because 5-year fixed mortgages, we have now learned, come with big penalties. It doesn't matter if it's a big bank or if it is a monoline lender. Yes, they'll be lower at a lender that specializes in mortgages only, but there's still the potential, especially when rates drop by 1.5% in a year, for penalties on a 5-year fixed mortgage to be big even at a small lender. So we have decided going forward that our suggestion is to take a variable rate mortgage so that you know that you've got the flexibility to make changes, especially if interest rates go down and when they do go down quickly. Being able to change things up on your mortgage is the name of the game going forward from 2021 onwards. Now, rule number 2, and this was rule number 1 last year, is if you're buying a rental property, always take a variable rate mortgage. And this is more true now than it has been at any other time. And again, the reason why is because you want to make sure you're minimizing your payout penalty risk. We realize now that you want to be making sure that you minimize your payout penalty risk on any mortgage, but specifically on rental properties, you really want to make sure that you're minimizing that risk. And understand that when you're buying a rental property, you're buying it as an investment. The easiest and quickest way to give a whole bunch of your money to the bank and a whole bunch of your equity to the bank, if you decide you need to sell that investment, is to take a 5-year fixed mortgage on a rental property. Absolutely just avoid it and take variable rates so that you know that you are never going to have that big equity grab from the bank if you need to break your mortgage. And understand that investments are investments, things change, people sell them. If you own a rental, you will statistically be one of the people who decides that it is no longer for them at some point in the future. And you want to make sure that you've got the flexibility of a variable rate mortgage if you do own a rental property. Rule number 3 is that we want to make sure that we aren't picking the mortgage with just the lowest rate. We want the best combination of lowest rate and flexibility. And what that means is, 1, no more fixed rate mortgage. I hope that you're sensing that there's a theme here. But number 2 is, when you do choose a variable rate, make sure it isn't one that is of the discount variety. And that leads us into rule number 4. Rule number 4 is stay away from discount or no frills mortgages. This is the type of mortgage that you will find if you go into the Googles and you search for lowest rate in Canada. If you are getting the lowest rate in Canada, you are more than likely getting a discount or a no-frill mortgage. And these are the type of mortgages that come with the inability to switch lenders when you can get a better deal. And believe me, 2021 is going to be the year of better deals. There are going to be better options out there. They're the type of mortgages that have huge restocking fees, so that if you do try to leave, not only do you have a penalty, but you also have another fee on top of that in order to try to convince you to stay, so you don't have to pay out those large cash amounts. And More than anything, they are just inflexible and the type of mortgage designed to get you to stay rather than leave to go to another lender for a better deal. So stay away from these. They are no good. Now, rule number 5 ties into rule number 4, because how do you know if you're getting a discount mortgage? Well, the best way to find out is to deal with a knowledgeable mortgage broker. Let's call a spade a spade. It is 2021. The bank versus broker conversation is over. Brokers have significantly more options. They have options with banks. They have options with lenders that specialize in just mortgages. Those lenders that specialize in just mortgages can't skate on their reputations like the big banks, so they obviously have better products. They have to, or they wouldn't be in business. So consult a broker. Leave your banking to the bankers and your mortgages to the mortgage brokers. It is absolutely essential and imperative that you consult a great mortgage broker, and not just a great mortgage broker, but one who isn't only going to sell you rate, but take you through the differences between each type of mortgage, including the discount mortgages, so you know exactly what you're getting into. Rule number 6 is if you don't take any of my advice and you do decide to get a 5-year fixed mortgage, just make sure that you don't get it with a big bank. Fixed rate mortgages and big banks are not your friend. If you're going to get a fixed rate mortgage and you are absolutely dead set on that option, get it from a monoline lender, a lender that specializes in mortgages. So a company like First National or MCAP or CMLS, these are companies that specialize in mortgages. It's all they do. Again, they can't skate on their reputation, so they have to have better products than their big bank counterparts. Otherwise, again, they would not be in business. So if you absolutely insist on a 5-year fix, go to one of these lenders. And rule number 7, and this is the same rule number 7 as for 2020, is review your mortgage on a quarterly basis. Don't just set it and forget it, but pay attention to what's going on in the market. Pay attention to what's going on with interest rates. If you find that you can get a lower interest rate elsewhere, take advantage of that. And because you're getting a variable rate mortgage in 2021, you're going to be able to take advantage of lower rates when they become available. And believe me, they will. And you want to make sure that you're staying on top of this. And also, if you chose the right mortgage broker, they're going to stay on top of this for you as well. Now, I promised you at the beginning of this video that I would tell you what I would choose for a mortgage in 2021, and here it is. I would take a variable rate mortgage with either a monoline lender like First National or MCAP, or I would take a variable rate mortgage with a lender like Scotiabank, who has a readvanceable line of credit if I was putting more than 20% down. And the reason for this is really quite simple. I don't want to be stuck in a 5-year fixed mortgage knowing that the Bank of Canada has said interest rates are likely going to go up in 2023, and knowing that if I take a 5-year fixed mortgage right now, I'm going to renew in 2026, and I could potentially have to renew into significantly higher interest rates. So my strategy, and I'll link up the video that I made on this strategy up here, is to take a 5-year variable rate mortgage. As interest rates look like they're starting to go up, I will consider locking in so that I can extend the amount of time that I have a low rate mortgage from not just 5 years, but to 8 or 9 years by basically taking strategic advantage of a variable rate product. And if you want more information on that type of mortgage, again, watch that video or hit me up in the comments below on our website, and I'm happy to take you through it. So in conclusion, how do you choose a mortgage in 2021? Well, the name of the game is short-term or variable rate mortgages. There's no other way to put it. 2020 taught us all a bunch of lessons about how to choose a mortgage, and the big one is that we need to have flexibility. So if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell, hit that like button so more people like you can see this video. And again, don't forget about our race to 10,000 subscribers. Again, hit that subscribe button. It's super easy to get entered to win, and we'll see you on the next video. Cheers.